What's up, guys? It's Cash Flow Cart, and today we are going over something very important. Something that I would say is probably the most important concept in terms of dividend growth investing and wealth building. And I do feel I reference this term a lot on the channel, and I figured it made sense to do a full video kind of diving into it. I was inspired by a recent dividend increase of one of my holdings. But before we get into that, guys, let's do a quick update on the portfolio. The total value of the portfolio is sitting at $64,982.26. So, we are just $17 and change away from that 65K mark. That's definitely exciting. This summer, I've been really happy with the portfolio performance, guys. You can see here the 3-month change of the portfolio. I would say that's summer. That's May 29th. Actually, my birthday is May 29th, so that's cool. So the 3-month change of the portfolio is 16.79% for a total, unrealized gain of $9,340. Just under that 10K mark. And I do want to point out, guys, in this time frame, I have invested some net new capital. It really hasn't been much, honestly, though, because in July and really mainly a lot of August, I've kind of been trying to save a lot of money, really trying to figure out what I'm doing next, and the portfolio investments have not been really there. So I'd say I've invested about no more than $1,500 in this time frame, guys. So the 3-month change is not quite reflective of this 16.79% in terms of stock performance. But I do want to compare, my portfolio over this time frame to that of the S&P 500. A lot of times we'll use kind of the S&P 500 as like a benchmark for portfolio performance, guys. And since May 29th, let's see if we can get to it. Since May 29th, the S&P 500 is up roughly 6.4%. Okay, so I mean, this is not to I am being humble, but I also have vastly outperformed the S&P 500 in the past 3 months. And guys, we've been doing it by following the plan of finding undervalued stocks and averaging into them at attractive prices. These are dividend paying stocks. These are dividend growers, and that's what we do on this channel. So, not to say I'm always going to be outperforming the market, but just in terms of the past 3 months, it has been, very rewarding. Let's not yap about that too much, guys. Let's get into the topic of today's video. I'm feeling pretty good. I just DoorDashed a sandwich because my car is in the shop, and I accidentally DoorDashed 2 sandwiches. So that was kind of a blessing in disguise. I got to eat 2 sandwiches for the price of just 2 sandwiches. All right, let's get into this, guys. The concept we are going to be discussing today is going to be yield on cost. Okay, this is different from dividend yield, and we are going to go over that in today's video. What inspired this video, guys? My biggest position. Well, let's see. My biggest position in the portfolio right now is Altria Group. It has been performing really well. I do have, a pretty attractive amount of unrealized gains on it. And if you guys have been with the channel, this is not one I've been adding to, at all in recent times. We will visit the charts. So I have 250 shares of Altria. And if you've been with the channel, like I said, I feel like in all my updates, I'm like, we're creeping towards that 1K mark in income from one position, guys, with this recent increase of Altria's dividend of 4.1%, guys. We went from 980 to 1020. So we did cross that 1K mark on one position. It's kind of at a point where it's like, I probably don't want to add to this one for a while unless it gets to kind of what I see as bargain basement territory again, just for the sake of, okay, I don't want too much of my portfolio income concentrated from one stock, because obviously with that comes quite a bit more concentration risk, guys. So yield on cost, the most important concept in dividend investing. Let's discuss how we're going to calculate this, guys. First off, let's just look at what a dividend yield is. Okay, so Altria's forward dividend yield is 7.67%. And the way you're going to calculate that is by taking the annual payout on a forward basis, which is $4.08. That's the 102 quarterly payment, obviously times 4, and it gets 408. You're going to calculate the dividend yield by doing, 408 divided by whatever Altria's price is right now, 53.35. If you want to multiply it by 100 just so it's prettier, you can. The current dividend yield on Altria, like we said, here's that number, 7.65%. Okay, it's not perfect, but that's just mainly because of, these numbers updating. So that's how we get the dividend yield. It's a fairly straightforward concept. Today, the concept we're discussing is yield on cost, okay? And essentially, you're going to do the same thing here, but rather than using the price or the yield on price, you're going to be using your yield on cost. Okay, so we are going to use Altria as a good example. My average price on Altria is $44.57, roughly $44.57. That gives me an open profit of $2,197.52. Again, guys, this is unrealized. So now with that $44.57, we're going to replace that cost number with Altria's price. And that's going to differentiate between the current dividend yield versus my own yield on cost for this position. Okay, so we plug in 44.57, and my technical yield on cost for Altria is 9.15%. So does that make sense? And that's what I like to refer to here as bang for your buck, okay? So with the money I've invested in Altria, I'm earning, my own personal dividend yield of over 9%, while Altria's current dividend yield is 7.67%. Okay, and that's where, a lot of special things can happen. And a lot of times you guys will probably hear me talk about bang for your buck, talk about the importance of finding these undervalued plays. And I think this Altria example really, really drives it home, guys. I think just wrapping your head around this yield on cost concept is going to be much more essential to your wealth building journey and to your dividend growth portfolio journey than dividend yield or having some perfectly diversified portfolio. And it's also going to be more important than current estimated income. And the reason for that is, as dividend growth investors, guys, we understand this is no, get rich quick scheme. This is more of a long-term game that's going to take us, essentially multiple years to compound and to develop our skills, find what works best for us. And if we can focus on capturing these, great yield on cost plays rather than being kind of blinded by, current dividend yield, we're going to fare much better down the road. 5 years, 10 years, 15 years plus. One other thing, or I guess two other things I do want to touch on in this video, just to kind of clear up maybe some different terms I've thrown around on the channel, guys. We look at Apple, okay? And I talk about this one a lot. Being a dividend growth investor, it might be kind of, counterintuitive when you guys see, okay, he's a dividend-oriented investor. Why is Apple one of his largest positions when it's only paying him $50 in estimated annual income, guys? Well, the reason why I've been so comfortable building Apple to such a large position throughout the years and leaving it in the portfolio is because Apple, we will go to the numbers, but Apple's dividend is so sustainable, and their free cash flow growth is so attractive to me. I need to pull up some numbers so I can really talk. So we can see Apple's free cash flow growth. September 2019, $3.19. The trailing 12 months, $6.75. Again, this is on a per share basis. So Apple's free cash flow growth is so attractive to me, as well as their current dividend is so safe at only a payout ratio from cash flow of 12.79%, that I realize that it will be able to, at some point pick up the pace of dividend growth. Okay. And that's kind of the lens I take for Apple. Does that make sense? So I still don't have, a great current dividend yield on Apple, but down the line, as Apple continues to grow their dividend, that's where that yield on cost or bang for my buck is going to get really, really special. Okay, that's kind of my lens on it. Guys, this is not financial advice. I just kind of like to explain the methods I use and the different ways I think about, okay, what purpose does different types of stocks serve in the portfolio, guys. We will look at Hershey because I've been talking a lot about Hershey. And as you guys know, it is the one I've pretty much exclusively been buying in recent times. So let's go to Hershey and kind of see if we can see the lens I'm using on Hershey from, that yield on cost perspective. So the dividend yield on Hershey right now is 2.86%, guys. Hershey's currently trading at 191.15. We'll do kind of the same thing here with calculating the dividend yield. That's going to be that annual forward payout, $5.48, divided by the current price, 191.13. For the video, I'll multiply it by 100. 2.87%, guys. You can see it matches up with Seeking Alpha's numbers. Now, again, yield on cost. I go to my Hershey position, and my average price, this one is a little newer of a position, so I don't have as amazing of gains as I do on Altria, but we're going to replace the current price of Hershey stock with my cost basis or average price. Okay, so that's 183.70 and 79, that's 183 and 71 cents. We will replace Hershey's current price, 183.71. You can see my yield on cost with Hershey is 2.982%, guys. That is, not super substantial, but that is quite a bit better than that current dividend yield. Okay, so this is kind of what I want you guys to be thinking about. How can I maximize my yield on cost in the future? It's not always finding the most attractive dividend yield. And we will mention this with Hershey. That 5-year growth rate here is 12.5%. So, that's going to put me in a point if it's a big if they continue compounding their dividend at this rate, it's going to get me to a point where I can get, a really, really attractive yield on cost in kind of a shorter time frame. Okay. So that's kind of the lens I take with Hershey, guys. I hope all this is making sense, guys. Again, that was the topic of today's video: yield on cost and how dividend growth investors can focus on it. I am going to go over one super quick nuance. I have seen different dividend investors on YouTube, and I'm not calling anyone out. Like, I know everyone has kind of their own personal methods and their own way of thinking of things that, suits them. But I have seen guys use kind of they don't count, I guess, reinvested dividends. So they use a drip and they don't count those reinvested dividends as part of their cost basis. Does that make sense? So they only use net new capital invested for calculating their cost basis. And I do want to mention kind of my take on that. And I know I've preached it before, but I think as a dividend investor, it's very important to understand that when a company pays you a dividend in cash, to me, all that is that's what it is. It's cash, okay? It's no different than net new capital. And I don't think you should try to overcomplicate this game by looking at like some sort of reinvestment plan as like free money, because guys, that is not what it is. You should treat reinvested dividends and net new capital kind of with the exact same approach. Okay, I do not use any sort of dividend reinvestment plan, and that's my personal take. I know some guys are more into like set and forget and just compound, but for me, that doesn't sit right with me. Every dollar that hits my account, whether it's invested that month or whether it's a dividend coming in that month, I want to strategically use, in the most efficient way to capture undervalued dividend stocks. Okay, so that's kind of my take on that. I would not recommend like viewing dividend payments as different, than a dollar you earn at your day job. Okay, I don't think that's healthy, and I don't think that's the correct way to think of this game, guys. That was a quick little tangent I guess I wanted to throw in at the end, guys. I'm Cashflow Cart. I release videos every Monday at 6 p.m. where we will talk about my own personal dividend growth portfolio. We will talk about exciting opportunities or stocks I'm buying. And it's going to be great. We are building the best community of dividend growth investors on YouTube. So if you haven't hit that subscribe button yet, please feel free to do so. My Instagram is in the description. If you want to follow me, you can. I just announced the videos on my Instagram, and I don't really post that much otherwise. But I guess if you want to follow my Instagram, that would be sweet, guys. I'll catch you next Monday, and let's build wealth.